So, hi everybody, my name's Ben. I'm CEO and co-founder of a company called Rainbird. Rainbird is a automation technology, AI-powered automation platform. Some of my team are here, so if you're interested in finding out a bit more about us, come and see us afterwards. I'm going to talk today a bit about innovation in your industry and protection, and how these two things go hand in hand, and how you can find the kind of balance between the increasing pace of innovation and the need for protecting yourselves and protecting your customers. I'm going to start by saying some things that I think, hopefully, are kind of obvious. Our clients are telling us that the mission for them today is about reducing friction in the customer journey, that everything that they're doing is about making that customer journey smoother in order to avoid this kind of frustration. They don't want customers that look like this. Now, it's pretty obvious that the customer journey is moving more and more online. You've seen lots of examples of this, I'm sure, already today. 4 in 5 European consumers are regularly using mobile for making their transactions, and instead of heading to their nearest branch. And actually, there's loads of fantastic statistics that back up this move towards online, this move towards digital. I'm not telling you anything new. We're saying that things like EY, this was last year, they found that 70% of adults in the UK are now using online banking in some form or another. There were 5.5 billion mobile transactions made. Actually, that was in 2017, so that increase is going quite exponentially. EY found again last year that around 20 million consumers in the UK have downloaded and are increasingly using mobile apps for accessing kind of day-to-day banking activities, sending money, paying bills, actually increasingly interacting with their providers as well, so asking questions, getting financial advice, those kinds of things. Now, I'm not telling you anything new here. This is all quite well established that consumers are increasingly moving online. We know that things like open banking, PSD2, are opening up a whole world of new innovation to meet this growing consumer demand for online and mobile, multi-channel banking experiences and financial transactions. And actually, I think we've only just started to scratch the surface of what those technologies are able to do, and we're not really nearly there yet to see where this is going to go. We all know that traditional banks have to compete against these faster, more innovative technologies, and to be able to increase the pace of innovation in what they're doing. It's no longer simply the case that the big will win out over the small, it's the fast will win out over the slow, that actually the more agile will win out over the stiff and the stubborn. But there's an important thing that is often missed behind all of those statistics and all of that great evidence that consumers are increasingly mobile, increasingly omni-channel in the way that they're wanting to access their banking services. And what is missed is how important human interactions still are in the way that we deal with our consumers, and how important that is across all the kinds of technologies that we're delivering. And actually, there are some other statistics that point to a slightly different trend. McKinsey found that last year, even in digitally diverse and well-developed countries in Europe, 30 to 60% of consumers are still going to branch to solve some of their banking queries. And interestingly, that's across whole different sets of demographics. It's not niched to just one type of consumer. So when they do that, it's really important that the quality of the interaction that they have in branch is really top-notch, because that's got to be able to beat the experience that they would have on mobile. And actually this works both ways. It means that when you are delivering different channels, maybe mobile, maybe web experiences to consumers, it has to be able to retain the key things that consumers are wanting by still going into branch, that human kind of interaction. Real-time, personalized financial advice is really, really good, but computer says no kind of interactions or unaccountable decisions, well, they're bad. Actually, Gartner have a term for this. They call it the AI shrug, the kind of indifference to recommendations made to consumers where we can't really back up why we've made that decision. We just say no. And that switches consumers off. Consumers still want humans in the way that they're interacting with organizations. So I want to make a case for a different approach to solving some of these problems using AI. I want us to be thinking about how we can use rule-based AI alongside statistical approaches to solving some of these problems and keeping a human in the loop, and why that is still very important in the way that we're delivering some of these services. So when I talk about rule-based AI, what I'm really talking about is human-down AI as opposed to data-up, starting with a person in the way that we're building these systems. It can be very tempting particularly when you're sitting on very large amounts of data, to rely on statistical methods or the promise of things like machine learning. And absolutely, machine learning can do incredible and amazing things in your organization. But if you rely solely on statistical methods, you put another barrier between your consumer and that all-important human interaction that sits at the other end of whatever kind of relationship it is that you're trying to build. So rule-based AI, perhaps working alongside statistical methods, is one way of solving the human-in-the-loop problem and keeping a human close to those interactions with your consumers. Now, when I talk about rule-based AI, what I'm really talking about is automated decision-making. So this is about human-down, rules-based approaches. Perhaps a little different to some of the things that you might be familiar with. We're not talking about if this, then that kind of rules. What we're talking about is building systems that are business-friendly, that your subject matter experts can understand and explain, and so that your consumers can understand and explain. You don't need necessarily a huge team of data scientists to go and explain how these models are working and to be able to go and make changes to them. Talking about systems that might be able to work in a very sparse data environment, or even perhaps without any data. Because although you may have lots and lots of data to back up your decisions you're making, those data may be uncertain, you may not have full confidence in everything that you see, and there may be gaps in those data. So you need to be able to provide systems that keep a human in the loop and can still make decisions and advise your consumers. I'm sure you'll be familiar with all the benefits of things like robotic process automation. What I'm talking about here is going one step further. So where RPA is about automating tasks, I'm talking about automating decisions, the kind of nuanced human decision-making that you have in your organization, the way that you're advising your customers or making decisions on their behalf. And of course, the really key thing that you get by starting with a human interaction, starting with people, not with data, is you get transparency. You get to be able to see how these decisions have been reached and explain that to your consumers, building trust in the system that you're building, but also explain it to regulators and other people who may be interested in what you're doing. So there's a good argument for human-down, nuanced decision-making being a route to solving some of these growing challenges of the way consumers are wanting to interact with technology. But it's also the case that these technologies can help when managing the risk that is evident in the pace of change of these innovations. While innovation is great, there's always another side to the coin, and we mustn't forget that there's risk involved when you're delivering any new kind of innovation. And something like half of all global organizations have been subject to some kind of fraud or financial crime over the last 2 years. It is a growing problem. Perhaps it's not surprising that as organizations embrace digital transformation, they become more exposed to risks of cybercrime, fraud, and other kinds of problems. Unfortunately, this is an all-encompassing problem that banks and other financial institutions are going to face as they innovate faster. And actually, looking at just fraud alone, I'll talk a bit about fraud because that's where we've had some successes. Just fraud alone, some of the numbers are absolutely staggering. Experian report that the UK lose £190 billion a year to fraud. And that's more than the government spend on things like healthcare or defence. Staggering, staggering numbers. And what is becoming clear is that these kinds of, this pace of change of fraud is tracking alongside the pace of change of digital innovation in the way that these products are being rolled out. The more channels that you're using to deliver your digital services over, the more your fraud footprint grows, the more there are blind spots that fraudsters will be able to exploit in order to reap problems with your customers. So it's important to look at customer innovation and what customer demands are in the light of how that might impact things like your fraud footprint. And actually there's a real paradox here. PwC did a survey last year that showed that more than half of their consumer banking survey respondents were interested in a complete omnichannel experience. So that's being able to go into branch and access the same services across a whole range of different digital services. But it's also the case that consumers will not tolerate any kind of friction in that service. There's a staggering statistic that something like 40% of consumers who are notified of some kind of fraudulent activity on a credit card will stick that credit card at the back of the wallet and not use it again, even if that notification had stopped a potential fraudulent activity. So you can see the dilemma here between, on the one hand, consumers wanting omni-channel experience, which then exposes you to a whole range of different fraudulent footprint and a growing landscape of potential criminal activity against consumers who won't tolerate any kind of friction in that process. And you've got to kind of find a way of squaring these two things, which is very challenging. And of course, the fraudsters are innovating and evolving just as quickly, or perhaps slightly faster, than those of us that are delivering these kinds of new omni-channel experiences to consumers. So fraud systems that are dealing with this kind of changing face of the fraud landscape have to be able to evolve very, very quickly and have to be able to respond to the changing problems that we're seeing. And I'm not talking about building systems that are rigid, that are decision tree based, that are if this, then that. What I'm talking about is finding models that allow you to take in all of your subject matter experts' expertise, experience, business rules, properly modeling what it is the experts in your organization know about how you're making recommendations to customers on perhaps how fraudsters are exploiting what you're doing, to build systems that can truly respond to, and in real time, to this problem. And actually what that results in is better outcomes. You get a system that has fewer false positives than plague the kind of statistical processes that you get, but it's also explainable. So you can explain to your customers why you're making a recommendation, why you're telling them that you think there might be fraudulent activity on a credit card, why you think that this product might be the right thing for them. So what you get is customers who feel supported, but you also get a system which is truly flexible and truly evolves with the way that you're changing your products and services and the way that outside threats are changing in the landscape. And it's also the case that every organization is unique in the way that the threats are coming towards them. Every fraud profile is unique, and so what's required is a tailored approach to solving some of these problems. You need to be able to model your unique channels, your unique products, your unique services and innovations that are different to everybody else's, because otherwise the outside world are going to find ways of exploiting what you're doing. And to adapt to those models in the face of change, you need people. You need humans who understand the way those models have been built and can modify them and can change them. So Rainbird is an example of a rules-based automation platform. At Rainbird, we like to think, and our customers think, that we've got the balance right between being able to provide a technology which is innovative and being able to protect our consumers. Our technology works through knowledge engineers. Knowledge engineers are the people who work with our clients' subject matter expertise to really help them understand what it is they know about their domain and build models in Rainbird of what it is they know. And these models encompass all of their human experience. Now, you might connect those models up to data that you hold behind the scenes, but it starts with people. Actually, there was a really great quote in a Forbes piece that went out last week, I think, that described knowledge engineers as the Sherpas for experts in your organization. And actually, key for us to making this work is empowering your subject matter experts to become knowledge engineers so that your subject matter experts can truly understand and manage the models that they're building so they know what it is that is being deployed to their customers and they can explain it to other stakeholders in the organization. And it means that they can expand these as you innovate. So as your organization scales, as you bring new products and services, you have the control, you have the ability to go and make these changes. So a running theme through our work in the financial industry, Rainbird works in lots of different sectors, whether it's creating customer-facing tools or helping back office face some of the threats and exposure that they have, has been that we're really about scaling human subject matter expertise, whether that's in fraud detection, tax judgment, or maybe improving interactions with consumers through delivery of new kinds of services. So that might be through AI-powered banking agents or through virtual brokers, those kinds of things. These are all examples of innovations. So maybe innovations in the way that the enterprise is reaching consumers, or maybe the innovations in the way the enterprise is delivering whole new products to consumers. But crucially, in each of these cases, we're able to deliver a rationale for the automated decisions that we're making. And a human retains oversight in the way those decisions are being made. So you've always got a person in the loop. And that you get the kind of efficiencies that you can see by using machine learning or robotic process automation. But you also get those benefits of being able to explain what it is you're doing and why you're making those decisions. You have this added layer of kind of nuanced human decision making that changes the way that you interact with your customers and actually builds trust. It means your customers are more likely to trust the decisions that you're making in an automated way on their behalf. Actually, we work in lots of regulated industries, and in any regulated industry, transparency is an absolute must. So you need to be adopting some of this kind of technology for a lot of the kinds of automated decisions that you're making anyway. Trust, privacy, data protection, absolutely of utmost importance. And it's only by keeping a human in the loop that you have any hope of being able to solve some of those kinds of problems. Quick closing thought. It's really important, we think, to remember why you're innovating. What is the purpose of your innovation? At Rainbird, we believe that innovation is about bringing the best out of people to improve experiences as well as to improve productivity in what you're doing. Financial services, that means a combination of human and AI technologies working together to improve staff performance, to improve customer relationships, and stimulate growth, and all those other good things that you're trying to achieve through delivery of new kinds of services. By keeping a human in the loop and using AI to augment your best people, you get to deliver innovation while still protecting yourselves and your customers.